this rate movement, you can see what's been happening here. When the overall shape of the rates was falling off here, it was very easy to be buying along this straight line. We got a great upside move with the big target up here, which never achieved and never reached the big target, which was obviously in line with this big sell block in the background that we had over here. So we never reached that price, which in some ways was quite surprising because of where we were, but it was definitely a lot more volatile through this phase, and I think a lot of people just factored that volatility into their pricing. They didn't want to get too exposed at the top edges as buyers. So the price dropped back down without me being on board at that stage, and you can see that generally as a rule, coming into the cash open, you can see that generally as a rule we've seen this slow but gradual up move in terms of those rate movements, and you can see obviously that became relatively straightforward about where the short sale was. There's plenty of near-term liquidity grab areas for that area there, and then obviously the cash open being the critical one. And there's the cash open, the most recent, the biggest area to play against. And you can see it became a very, very relatively easy short sell and an almost instant substantial profit. I mean, you're talking 65, over $1,000 basically in 60 seconds there on the NASDAQ, guys. So did everybody get it? Sell side top line. We told you what the main driver was this morning. We did ask the question and we had 2 correct answers. I think it was 2 correct answers. So we had 2 correct answers this morning that it was going to be the Fed line. The Fed line, does everybody agree the Fed line is rising at the moment? And on the basis that the Fed line's rising at the moment, therefore everybody would know about this price. And if everybody knows about that price, they must have the short sell. And if everybody's got the short sell, they've done $1,000 in 60 seconds. Could that be your day finished? Perhaps. Hopefully we'll see a few more opportunities. But the way this is going at the moment, I'm still thinking sell side, retesting the lows would make an awful lot of sense at the moment. And we'll see if this storyline keeps developing from that short sell as the interest rate curve looks a little bit steeper as we get into today's cash market open. So great trade. This is the classroom we did last week. If you remember, we looked at the big macro on the Fed and we talked about why we were big buyers of equities. And that was that big narrative, remember, that we painted last week. We did a whole classroom on it. So you'll remember that. So it's not as if it's a surprise today that this is the main thing we're talking about. And obviously, if you just cast your eye across the coming week's work in terms of fundamentals, then you'll have been able to obviously understand that this was the week that we would be paying more attention to the Fed line than pretty much anything else, because that's the trade that we're going to be looking for. And that's the trade we are looking for. That's the trade we're doing. That's the trade we talked about last week. That's the trade we're doing this week. So the one thing I ask is, how many people have already forgotten? Remember last week we said that it was all about remembering stuff and making your notes, making sure your notes were up to date about what you were going to look at this week. And we asked you this week just to try that a little bit harder to remember stuff. Well, I'm assuming you've done that. I'm assuming you've remembered that stuff. I'm assuming you've got yourself involved, and I'm assuming you've been able to take full advantage of this morning's incredible opportunities to trade the interest rates. It's been a good day so far, guys. It's been a good day so far. Sell side top edge bonds has also been a trade that I've been interested in, and you can see we did get another retest into these pins. There was a couple of pins to this top line that we had just forming in there. It pinned off a 4 once and then it pinned off a 4 twice. That's good enough to try and get that short sell against a real yield, which is quite substantially higher. You'd imagine we should be trading into the bottom bracket of this area if real yields are touching into those high prices. Remember, the reason why real yields are higher is because nobody wants them. That's why they're higher. So if nobody wants real yields, what's the point of owning a bond? It's not worth anything. The yield is going higher because nobody wants them. So you sell your bonds, and that's exactly how you've been playing this. You've been trying to get into that short sell on bonds. You've been working some sell orders. The 129 wholesale prices catching your eye, of course, in the background as are key levels. And you're working the short sell on bonds. We've had one trade on the short sell. If you took a second one, but there has been a third trade that's just happened there on the pins against the 129 level. and it's giving you a very relatively straightforward quick short sale for another $300 profit. So well done anybody that's on the short sale, guys. Congratulations. Sell side Nasdaq again there off the 500 break. If anybody took it this time, I'm assuming everybody has. Again, I'm making wild assumptions here, but I'm assuming everybody took it on the big strong uptick rejection price. 2 pins to the top edge. Sell side 11,500. It's just traded 475. 475, yeah? Everybody short selling? Good stuff. In terms of market structures, I think it's pretty obvious as well about that short sell, isn't it? Because if you look at your structures last night, it was RGL only. It's in the red zone. It's quite clearly only in the red zone, and it's quite clearly coming off those key references. You can see here for yourself that the RGL was running this price level here. You can see that we also have these key dealer references here. And obviously that left you with absolutely no problems getting that short sale. There's 6 o'clock in the morning, so you're coming into a great level. This was the London Open here, which made it even better. And then there was a short sale back against the 30,900 wholesale. And then there was the short sale at the cash open. And that's been short sale, short sale, short sale. It's below the RGL. There's no other reference in sight until we go all the way down. But obviously that's going to be determined by the shape of today's interest rate curve as the bond traders get into the meat of the day session. So we can obviously get a better reference based on those bond traders' curve trades. And that's what we'll be paying very, very close attention to. So welcome in, guys. Been a great day so far. Easy money day. Nothing of any real difficulty. Not a lot of trades, but some pretty straightforward trades, if you ask me.